We are just 4 trading days ahead of the end of 2022, which won't be remembered as a good year. Whether you were in equities or in bonds, this was a negative year, but we had at least 5 full days of trading in the last week. Let's summarize them. Let's do our weekly recap, top 10 ideas or top 10 news items that defined this week. Are you ready for it? Let's go! Hi everyone and welcome back. I'm Micha from Stock Talk with Micha Stocks, where we talk stocks, we talk about investments, we talk about companies that are making the news. If you're new to the channel, welcome. This is a great opportunity to hit that subscribe button. And if you have been here already and you turned the bell into all, you probably got notification of this new video. Let's directly dive into the summary of this week. This is the Dow Jones average, which ended the week, surprisingly enough, almost 1% gain, 0.9. The Russell, 0.01. Unch, the way we pronounce it. Then the S&P 500 minus 0.09. And the NASDAQ had a very bad week, down over 2%, with one of the major companies in the NASDAQ falling almost 20% during the week. We're going to talk about that. Let's take a look at the major indices. We see the XLE, the energy sector, going up by 4.2%. That was generated by increase in oil price. We're going to talk about that. Utilities up 1.4%. And the worst performers were the consumer discretionary. The same company, we're going to talk about it. You know what? I'll share with you. It's Tesla, which performed very bad this week. And Tesla's weight in the consumer discretionary is so big that it impacted and ended the week minus 3.08. And we have technology, and we'll see in our heat map why technology was also on the red. When we look at oil prices went up by 7.68%. Part of it is because it became too oversold, and part of it is because it's winter and people need more oil. Natural gas fell very rapidly this week, down over 22%. And when we look at our heat map, stock heat map, we can see that the big, what was called in the past FANGs, whether it's Microsoft, Google, Apple, Meta, Amazon, and of course Tesla on the right-hand side, fell between 1.7% to 22% on Tesla. When we look at the major stocks that we follow every week, the 17, let's call them the common stocks, well, apparently we follow stocks that are in a rapid fall. By the way, Tesla shows here at 18%. It's all a matter of how you measure the week, whether it's pre-market or aftermarket. That's why the numbers are a bit different. You can see that the best performing was, of course, the XLE. We talked about that. And Netflix, which ended the week on the green. All the rest came in the red, whether it's PayPal, which went down only 0.33%, but all the rest a lot more than that. And that brings us to the crypto market, which is surprisingly behaving as it should. Bitcoin went up in the last 5 days by 2.4%. Ethereum, ETH went up 4.4%. The crypto market seems calm versus the equity market. That brings us, of course, to our weekly top 10. And top 10 this week is number 10. We have the power outages, the huge storm that we are facing in the US. Over 5,000 flights have been canceled. And if you're someone that your flight was canceled, I'm really sorry for that. All the others, there are extreme temperatures, which came after very hot and humid temperatures, creating black ice, icy conditions, and of course, stormy conditions. We will see that impacting the market probably next week, with airlines and other hotels probably reporting a lot of open vacancies because of the storm. So that's number 10 on our top 10 list. And then that brings us to number 9. Number 9, Sofia Horta Acosta from Bloomberg brings us the top 10 ideas or news from China. And in China right now, it's a very, let's call it, strange situation. Up until a few weeks ago, China went with a COVID zero policy. No one can have COVID in the radius of I don't know how many miles, and then you lock down everyone. They decided to take a U-turn. Now people can come when they're COVID positive. The problem is that the hospitals are at a point where they cannot get any new patients. They're actually, when you look back at what happened in New York in 2020, they're probably getting close to that situation. That's how bad it is. So from one hand, they want economy to be first, open everything, get back to reality. But on the other hand, since some, if not most of the Chinese haven't got any vaccination and didn't get any exposure even to COVID because of all the lockdowns, they're rapidly getting exposed to it, and it will create a lot of ripple effects in the next few weeks. We will, of course, cover it in the next weekly recaps. That brings us to number 8. Number 8, we're still in the Far East. That brings us to the Bank of Japan. This is the head of Bank of Japan, Haruki Kuroda. Kuroda is supposed to step down around April, and everyone thought that until he steps down, he's not going to change the rate in Japan. But beginning of this week, he surprised the markets, letting the rates in Japan go up by 25 basis points. The reason that it came as a surprise is because he wasn't supposed to, and the other reason why he did it is mainly because of this chart. In this chart, we see the inflation reading in Japan, and you can see that a year ago, inflation reading was at 0.6, and now, a year later, it's at 3.8, meaning that inflation is starting to become a very big problem in Japan, and because Japan is an island, they need to deal with it in a different way than other countries do, and that's why they decided to take that course. But that brings Japan, just like all the other banks in the world, and actually all the countries in the world, to a situation where there's no more negative yields, there's no more zero rates. Money is now not that cheap. And we see that in the stock market on the day-to-day. That's part of the reason that the stock market fell as much as 25% during 2022. And it raises the question, what's going to happen in 2023? But we have still 4 more trading days. We don't need to answer that question as of yet. Brings us to number 7. Number 7 on our top 10 list is the cannabis stocks. The Biden administration is not able to add the Safe Banking Act into the budget, which means that there's another delay in opening bank accounts and all the financials needed in order to get the federal backing of cannabis companies, which brings the cannabis stocks down. Leading the decline is Tilray, going down 14.4% in the last 5 days. After that, it's Grow Generation, which is kind of the Home Depot for cannabis growers, down almost 14%. Then we have Aurora Cannabis, down 10%, and all the rest. A bad week for cannabis stocks, mainly because they're not getting the tailwind that they need from the federal perspective. From a state perspective, if I'm not mistaken, this week or next week, it's going to be legal to sell cannabis in New York, for example. In other states, of course, New York is late to the party. Other states have implemented that as well, but they're still waiting for the federal approval, which can get these stocks to skyrocket, but till then, they're more close to the ground than skyrocketing. That was number 7, which brings us to number 6. Number 6 on our list is major earnings. So we're not in the earnings season or the peak of the earnings seasons, but we still had 3 big companies report. We had Nike reporting very solid reports. A day after the reporting, the stock went up almost 13%. We had FedEx with very strong earnings. And actually, FedEx is dealing with you might call it the first signs of recession, reduction in packages, and they're dealing it with cutting their workforce, which of course improved their bottom line, and the stock market liked it, increased the stock by 4%. But Micron surprised the market with weak earnings, which took the whole chip sector down. We saw that in almost all the chip stocks. We'll go over them in a second, but you can see that, of course, it impacted NVIDIA, AMD, and Qualcomm. And when you look at the table, you can see Taiwan Semiconductors in last week went down 1.85%. We had NVIDIA going down 8.24%. Funny enough, Micron didn't go as low as all the others, so others got the impact harder. due to Micron reporting bad results. You can see Broadcom, which is less exposed to Micron, ASML went down 4%, Texas Instrument down 3.05%, Qualcomm, Intel, and all the rest. AMD went down only 1.36%. That was number 6, which brings us to the top 5 on our weekly recap. Number 5, we have Tesla. So a lot of people are asking me, how come Tesla appears every week? Is it because you like the company, or is it because there's a lot of news? So Tesla this week went down to being, I think, number 10 or number 11 by market cap. Got down dramatic from where they were. Why do we keep covering them? Because there's always news about Tesla. Tesla is one of the most covered companies and, of course, stocks in the market right now. If you go to CNBC, if you go to Bloomberg, there will not be an hour or at least 3 or 4 hours that you won't hear at least one coverage of something around Tesla. I would say that it's mainly a negative coverage, but it doesn't really matter. You would hear coverage. And that's why, although it's number 10 or number 11 by market cap, it's still being covered every week. And why is it here? Because on Thursday, Elon Musk went on Spaces on Twitter, which he owned, and for an hour discussed with a lot of worried investors, a lot of worried Tesla investors, what's going on with the company. And of course with Twitter. He talked about that Twitter is not really taking a lot of his time, and he's very close to ending all the work at Twitter, and he's gonna step down as the CEO of Twitter. He also talked about Tesla and the demand, that he says that at least from his perspective, there's no demand issues. Every car that they can produce, they can sell. And one of the things that was supposed to be the most important things to drive a pivot in the stock, in the price of the stock, was Elon saying that he's not going to sell more shares in at least 18 to 24 months. Now, he said that before, so a lot of people take that with a grain of salt, but at least he said it. So that's one piece of information. Of course, it didn't really change the course of the stock. We're going to talk about the stock price. Here it is. So as a year to date, the stock plunged 69%. In the last 5 days, it went down almost 20%. As you can see around here is let's call it the rapid fire. Elon Musk tried to create that stop in the hemorrhaging, but still the stock is down almost 20%. And there are other sides of that. Those are the short sellers. Short sellers are up almost $12 billion in profit. Some say around $18 billion. It really depends when they cover their shorts. So a lot of people made a lot of money on the decline of Tesla. And that is probably, at least from my opinion, and remember, nothing here is financial advice. Everything is only my opinion. That is part of the reason why it's being covered so much and so negative, even when it's not news anymore or not newsworthy. And then you do see a few things that are worth mentioning. One is there's an increase in discount on cars delivered this month. So if you are planning to pick up your Tesla, you don't need to wait for the Inflation Reduction Act starting beginning of January. You can go and pick up your car and get a reduction of up to $7,500, which is probably the equivalent of what you'll get through the Inflation Reduction Act. That's one reason why that discount is available. The other reason might be that people are not taking cars. Might be that the recession is already here and not around the corner. We don't really know. And that's part of the problem, that Tesla doesn't have a PR team. So when they add discount, no one really knows why. If it's because they want to get more people with a new car through clearing inventory, whether it's because demand is slowing, or whether it's because they're going to change their hardware and they want to clear the inventories. No one really knows, and that's part of what's keeping an overhang on the stock, because if no one knows, then everyone goes to the bad scenario saying demand is down, people are not buying Tesla cars, and they need to reduce their price, which makes a lot of sense. And last thing that we saw a few hours ago is that Tesla halted production at the Shanghai plant ahead of the planned date. So they were supposed to halt it at the end of the week, end of next week, end of December. And they started this weekend. Again, whether it's true, whether it's not, we don't really know. What we do know is these are all the rumors that are probably keeping the stock down, and they're going to keep it down until we will see hard evidence on the deliveries, which will happen in 10 days. The beginning of January, we'll get deliveries across the board, US and China, and we'll be able to understand if demand is slowing down or demand is increasing. Talk too much about number 5. Let's go to number 4. Number 4 on our list is Google. But it's not really Google. I'll start with this site. It's layoffs.ai. In the last few weeks, I've mentioned it several times that layoffs, whether they have increased dramatically, and you can see over 1,000 tech companies have already initiated layoffs in 2022, which resulted in over 150,000 employees laid off. Google is the last one that is increasing their exposure, or actually updating their employees that they are going to increase layoffs in 2023. And behind the scenes, there's a lot of talks that beginning January, layoffs are going to pick up very rapid. Companies are waiting for the holidays to end. They don't want to lay off people before the holidays, except if you're Goldman Sachs and they did it. That's part of their, let's call it, ritual. Other companies are waiting till January. Whether it's going to bring the Fed to the point where the Fed sees that employment has weakened and they can pivot, or it's not enough, we will see. But Google is the latest one. And the reason why I'm mentioning Google is because they have over 130,000 employees. That's a lot of employees that can lose their jobs. So layoffs, we're going to talk a lot about layoffs in the next few weeks, which brings us to number 3. On our number 3 is a combined, let's call it top 3 of data. Liz Ann Saunders, of course, talks about new home sales. So we saw an uptick, a bit of an uptick during December, but home sales have plunged from the beginning of the year. The reason for that is that if this is the 30-year fixed mortgage rate as of October 2021, which was 2.7%, we got to a peak of 7% and went down to 6.2%. That created that opportunity for this month buyers. But when you look at the bidding war is down. Real estate has almost stopped totally. People are not coming to see houses. There are no openings. The real estate is really, really frozen right now. Will that stop the Fed? No one really knows. So that's on the real estate side, or housing. And you can see these are the number of houses sold. We're very close to the number of houses sold in 2020 in the peak of COVID, March 2020, when everyone was in lockdown and no one bought a house. We're very close to that point. Does that make sense to you? Those are the numbers. Let's go back to the next numbers are the PCE, which is let's call it the Fed most preferred inflation metric. It came in line with expectation, 5.5%. And there's a debate between people that are looking at PCE or CPI, the differences in weighting between the different categories. Are they looking at a 1-year run rate, or are they looking at the last quarter run rate? And this is the difference. Here you can see on the blue, the PCE, the total PCE, and on the, let's call it the orange, yellowish, the core PCE. Why is there a difference? The biggest reason is because a year ago we had Russia-Ukraine. We had problems with supply chain. We had a lot of issues. When you look at inflation, whether it's CPI or PCE, and you're calculating it according to last year, you're basically accounting to everything that happened back then, when you still see rapid increase in inflation. But if you know that in the last 3, 4, 5 months, there's a rapid decline in inflation, if you keep calculating 12 months, you're basically driving, looking at the rear mirror instead of looking forward. Because if inflation is dropping like a rock, then you need to calculate whether it's quarterly or 6 months. So right now, a lot of pressure on the Fed that they're not looking at the right data. They're basically going to put the market in recession. Whether it's true, whether we are already in a recession or we're not in a recession, everyone has their own opinion on that. And you can see the one thing that we do see is that there's a decrease, of course, in personal spending, which came lower than consensus. People are not spending as they would. And I remind everyone, this is the holiday season. Usually They spend a lot more in November, and of course in December, we'll see December data probably during January. And when you look at Atlanta Fed, which measures the GDP, you can go to Atlanta Fed website, and this is updating constantly from data that is being gathered across the U.S. You can see that we are again at the 3.7% as of December 23rd, which means that we have just ended the 2 quarters of negative prints of GDP. So are we in a recession? Aren't we in a recession? That is the biggest challenge. That's why companies are taking a step back and saying, let's assume we're in a recession. Let's reduce our expenses. Let's focus on surviving the next 12 to 18 months versus spreading when the Fed printed money. Everyone has their own opinion. The data is conflicting to a point where investors are confused. And when investors are confused, they play defense. They don't go to risky assets. They go to a risk-off trade, which brings us to number 2. Not a risk-off trade, but number 2 is, and I want to shout out Charlie Bilello for this chart. This is, as of this week, the equity ratio between calls and puts. I'll put it in very easy to understand to people that are not very familiar with option trading. When you buy a call, you're basically betting that a stock is going to go up. When you buy a put, you're basically betting that the stock is going to go down. I'm trying to make it very simple and not complex things. They're selling and all that. Put that aside. Assume that when more people are buying calls, they're bullish on the market. When more people are buying puts, they're bearish on the market. As of this week, we got to a point where for every 1 call that was purchased, there were 2 put options that were purchased, meaning that everyone is leaning to the bearish thesis. When everyone is leaning to the bearish thesis, usually the market tends to surprise them. But currently, that is how investors are positioning themselves. But there's a caveat, and the caveat is on the 1 day to expiration. Because every piece of information right now moves the market, whether it's PC, CPI, ISM, PPI, home sales, these rapid, volatile pieces of information brought investors to a point where they buy options on a 1 day to expiration. They buy it till tomorrow. Now, the S&P, the major averages, have an expiry every day to 2 days. So basically, you can hedge yourself on a daily basis. I don't know if tomorrow there's going to be a report. Let me hedge myself. I'm going to buy puts. Tomorrow there's going to be something else. I'm going to hedge myself. So that created that ratio 2 to 1. Whether it's going to end into 2023, whether it's going to even increase in 2023, due to the amount of money that short sellers have made in the last year, probably will increase. And that is going to drive a lot of volatility, driving us into 2023. Which brings us to number 1. Number 1 on our list is not even a publicly traded company, but it drives the news. It drives the market. It's Sam Bankman-Fried. After going back to the U.S., he is out. He's not free, of course. Let me see if this works. It's not going to work. It's refreshing. He's not free, of course. He's under house arrest, but he got out on bail of $250 million. To put it into context, Madoff was 10th of that from a bail perspective. Now, there's a lot of questions who bailed him out and who had all that money to bail him out, whether they had the money or didn't have the money, or it's only his parents' estate. But this is him and his lawyer flying first class or business back to California to live in the basement of his parents. Does that seem like someone that someone is against that did something bad, or it seems like the regular crypto millionaire? You can answer that question by yourselves. Of course, this is very, very strange. Everything that is going on with the FTX. And of course, he didn't do anything bad until proven guilty, but all his let's call them, and everything, of course, needs to be clarified in the courts. I'm not saying anything, of course. I'm being very cautious here. But Carolyn Ellison, which managed Almeida, admitted during her hearing that she conspired to use billions of dollars from FTX customers. Remind us all, FTX owned Alameda by 90% of it. She also said that everyone knew that. And so Carolyn Ellison right now is telling everyone in the court everything that happened behind the scenes. And of course, Gary Wang, which also worked with Sam Bankman-Fried and Carolyn Ellison, as well, said that they created the back door so money will be transferred from one side to the other. Basically, they're saying that customer funds were commingled with investments which shouldn't have been done. And then goes back to the question, why is he, because he was able to put millions in bail, why is he home and not in prison like others? A big debate is going to be around that, and that's why it's on our top 10. Are you ready for next week? Next week is going to be a calm week. The reason why it's going to be a calm week, first of all, because Monday we don't have any trading. Monday the markets are closed. Tuesday, Wednesday, Thursday, Friday are the last 4 days of trading. Not a lot of trading, not a lot of volume. Most investors have already closed their books for this week. The big question is, will Santa come in for a Santa rally? Santa rally, in theory, starts Friday, which started 2 days ago. Tuesday, Wednesday, Thursday, Friday, and then the first 2 days of the year, which would be Tuesday and Wednesday. Whether Santa would come, it's a good question. 80% of the time Santa comes, which means that the market are up in these 5 plus 2 days, 7 days. Since 2022 was anything but the regular year, who knows? That Santa rally, we don't have any super interesting information. What we also don't have is companies that are reporting. We're on the verge of getting into 2023. New companies are going to report, or actually new reports are going to start coming out. And that is it. I hope you enjoyed the weekly recap. You can write in the comments below if you would like this format to change a bit, to update a bit, if you like it, if you don't like it. And of course, if you liked it, smash that like button. It exposes the YouTube algorithm to more and more people that are interested in the stock market and want a weekly recap, maybe in a top 10 way or in any other way. Till next time, till next weekly recap, which might even summarize 2023. We'll see. See you later.